Hello traders, Sid here with another weekly watch list video, and in this video I'm not going to cover any stocks. Instead of that, what I'm going to do is I'm going over all this Nasdaq, S&P 500, SPY and so on and so forth to show you the trend. So since last couple of weeks or more than that, we saw disgusting bloodbath in the market. Now after such a heavy bloodbath or heavy sell-off in the market, we were expecting some kind of like a bull rally or relief rally in that sense, and we got one. After Wednesday, we saw that bullish momentum coming back into the market, but can you trust it? For me, it seems like it's going to be a bull trap. Why? Because of the price level. So let's start with the Nasdaq. So if you see this Nasdaq, all this downtrend stops over here, and from around like 11,500 we bounce back, and now we are heading towards this 0.382 level. Now why fib retracements are important in this case? Because if you take a look at this fib retracement very carefully, look where we are heading. So Nasdaq is heading towards this 1300 level, and what we have over there, we have previous support turning into resistance, and 1300 will be a major level to break. What we need to watch for is after that breakout, we might get that breakout, don't get me wrong, we might get that breakout, and it's absolutely reasonable to have that breakout, but can we hold that level? What I mean by hold is like we need to see some kind of like a consolidation for few days or maybe few weeks to see that market is holding that level. If market couldn't hold that level, then what we can see is we can push to 1300 level, hold it over there for a few weeks, and then get absolutely nasty rejection from that level. And that can happen. It's absolutely possible because we are in a defined downtrend, and when we are in a downtrend, usually we get these types of bull rally. So that is absolutely normal. Just don't take the risk. Wait where market wants to go, whether it can hold the level, and move forward from that one. So here I covered the Nasdaq. Similar scene you can see on S&P 500 or ES1, and if you see the fib retracement, we are already at that level, and we kind of hold that level as of Friday. Now Monday is holiday because of the Memorial Day. Now what we need to watch for is, can we break through this level? Otherwise this previous support can turn into resistance and we get nasty rejection from there. Russell, it's the same story. It's at that level, need to watch whether it can reject or hold that level. SPY story is not different because it basically mimics that S&P 500 ES1. So we are at that level, we need to see if it can hold or break down. XLF, same situation, nothing different. We got that boost for last few days, and we are heading into the resistance. Now the XLE is a little bit different because usually during the time of recession, energy sector and consumer staple, consumer discretionary and healthcare sector, these sectors usually tend to go in opposite direction of the traditional stock market. Usually that's the trend. Here in XLE, if we get a continuous bull rally into the stock market or other sectors, then probably we will see a pullback where right towards here, where we can see that the previous resistance can act as a support, and after that we can get a bigger bounce from that level, and it's due for some kind of like a pullback. Maybe it might not happen right away because we are at all-time high or close to that. Yes, we are close to that level. Probably this level can act as a resistance. Since I zoom out on this chart, so you can see that we are at the resistance. So there is a good probability of getting a pullback on energy sector. Now the VIX is also interesting. VIX is holding this level nicely, And if you see that it got rejected previously from these 2 points and it's holding that trend line pretty nicely, so it can bounce back up, and if that happens we can get another sell off in the market. QQQ story is not different. It basically because it mimics Nasdaq, so it heading towards that major resistance level and probably get rejection from that level. XLY, consumer discretionary, this sector got a nice bounce, and similar to other sectors heading towards the resistance. So that theme is repeating all over the place, and we just need to watch whether we can hold that level or not. XLV, nice bounce, similar to other sectors. And also it at its resistance. What I'm expecting, since Monday is holiday, rest of the 4 days volume will be lower and probably we will see a decent pullback in the market. XLP is we had a nice recovery from this bigger drop. XLP covers this consumer staples, and if recession continues, and let's say Ukraine-Russia war and other things, geopolitical things, if they keep going on, then probably we will see the bigger boost in consumer staples. Now in case of consumer staples, we still have some room left to push higher towards this 0.618 level. So if there is any momentum left and bulls can push it towards the 0.618 level, then that would be an interesting short-term play towards the long side. So that's it for that XLP sector. There is a little bit left to play. Now the oil and gas sector, it is pushing higher and higher, but considering this steep bull run, I think it is also heading towards this resistance. Maybe it can reject from here or from this level. We need to watch for. And since I said that this energy sector is little bit inversely correlated to traditional stock market, just watch out, because if we get a bull rally over there, we might see a pullback in energy sector. If we get a pullback in traditional stock market, we might see continuation towards the upside in the energy sector. So as you guys can see here, most of the sectors are heading towards a major resistance. Now, as I said, we just need to be patient and watch whether it can hold that level, break through that level, or consolidate it over there before breaking down. We don't know. We just need to watch out for all this type of actions and then proceed accordingly. So thank you for watching this video, and see you again in next one.